Scruffy, here's your coffee.
Ooh, coffee, coffee, coffee. Is that for me?
It is.
Oh, lovely. Scruffy's got a coffee, and we all know Scruffy likes a coffee. Hold on a second here. Why Scruffy got a coffee?
You've got a coffee to drink while you go and clean the office.
Clean the office?
Yeah.
Are you off your rocker? I'll tell you what, guys, I'll go and make a video instead. Come with me. She's a good girl, and she's made me the coffee. So what are we doing today, boys and girls? Well, today I'm asked constantly if I would show a few more strategies and a little bit on indicators and how we make money from it. Because essentially that's all I'm asked all the time. How do I make the money? I want the money. And I wish they wouldn't. Because if you're chasing the money, you're going to fail before you start. Because the money isn't your driver. The process is the driver. If you get your process right, the money will follow. And I keep trying to say that, and it's kind of where the words at the end of nearly every video come from. Do what you love and the money will follow. I love the screens, I love the charts, I love the markets. And because I have a set process, my money comes from the position size I put on, and it just follows what I do. But if I went in thinking I need to make £500 a day, because that's what I've seen on the land of make-believe, I'd be finished before I start. So please, guys, stop chasing the money. Follow the process. And if you get your process right, the rest of it will fall into place. So I hope that kind of makes a little bit of sense. Rant with Scruffy. Anyway, so what I'm going to do is I'm going to show you an end-of-day system. And it's a simple system, and it's based on the ICHIMOKU cloud. Now, I could go into what the ICHIMOKU is. Essentially, it was invented in the 1930s by a Japanese journalist, and he spent 30 years working the figures out and presented it in the 60s. And it was based on share trading on a 26-day working month and a 52-week period across a year. 52 weeks in a year, you work 26 days of those months, and that's how it was worked out. And then it had what's called a conversion line, trigger line, whatever you want to call it, which is basically a 9-period moving average, which crosses over a 26-period moving averages. And these are compressed averages. They're based on the high and the low, the midpoint, and then projected. They then have 2 lines, which is called a span A and a span B, which make up the cloud. And it's the cloud we're interested in. Because when I show you in just a second what it looks like in real life, your first instinct will be, oh my God, because it was mine. When I first saw this indicator, I just couldn't make head and tail of it. It's just horrendous to the eyes. And in a way, that's the way it's meant to be. Because when it looks clean, it's tradable. When it's all higgledy-piggledy and a mess, you can't trade it. So I'll pull up a screen and I'll show you it. Okay, so standard chart. This indicator, for all it can be used in any market, it works best on higher time frames, the hourly and above. For this purpose, because I'm going to do an entire year, I'm just going to use it daily, otherwise I'll be on it for hours. And that way it'll only be a few trades to look at, and you'll see whether it wins or loses. Okay, so when I pull up this chart, or this indicator on the chart rather, need to get the coffee to lubricate the brain, but Winky's on form, she's making plenty today. And as a side tip, if you want to be a trader, make certain you have an understanding partner if you're doing this full time. There's no better than Winky. She's the love of my life, and she understands what I do for a living, and she sees the highs and lows, and she helps smooth that out. because your wages will be high and they'll be low, and you need to be able to cope with. And a good partner will help you. Sorry. Little rant with Scruffy. Or no, not a rant with Scruffy, that one. That was a compliment to Winky, because Joanne is my best friend and I'd be lost without her. So there you go. Anyway, so I'm looking at this, and your eyes are going to explode in a second when I put this indicator on. So you look at it, and I'll put all the components of the indicator on. That is what you're looking at. That is mental. And then you start adding other indicators underneath, like your volumes, your RSIs and everything. It'll just blow your brains out. It is horrible, but it's meant to be. All right? And I'll show you the way it's meant to work. So you have this section here. In fact, I'll show you. I'll just take them off and I'll build it up for you. So you have the ICHIMOKU. And what this is, it's the current price projected back 26 periods. And the idea behind it is, if it's in the clear, as it is here, the market is trending. All right, so you can see that's a nice downtrend because it's nicely in the clear. Whereas when it's in the price, as it is here, you can see it's flat. All right, and that's the idea. It just shows you between a trending market and a ranging market simply by its position. So the next part is the Kinjin. All right, and it's essentially a moving average. That's all it is. All right, and you can see. And you can use that to trail your stock or as a standard moving average. Then you have the fast line, which is the Tenkan, and your trigger points are where these cross. That's the traditional way of doing it. So that would cross there. You can see the clean cross. You would look across to see if that is in amongst the candles. It isn't. So it's fair to assume that the price is going to go down. And that's what it's done. So that's kind of how we use that. Then you have the spans and the cloud. All right. And the span A and B is basically the line either side of the cloud. And it's worked out on moving averages. One of them is 26, which is the A. The B is 52 periods moving back divided by 2 and some other higgery-pokery. And then projected 26 periods into the future. And that's why this is a leading indicator and a lagging indicator at the same time. Because this section here is trying to show you what's happening in the future. And the idea is, if it's red, it's going down. If it's green, it's going up. All right, simple as that. And the way you would read the indicator is the price here is done what's called a Kumo break. Okay, so it's below the cloud. You would look 26 periods into the future to see if that's going to change colour to coincide with that. Then you're waiting for a cross of this, and then you look at that. Madness. It does work once you get your head around it, but I don't think you need all of these elements. And I certainly don't use all of these elements. I boil it down to its lowest form. So I take all of this off, and all I work with is that cloud. Because the cloud is a great support and resistance. When it's flattening out, because this is based on 26 and 52 periods before, you know the price is flattening, it's not going anywhere. So it becomes a support and resistance area. There, there, there. And you can see it, nice and simple. And they just become areas of what we'll call interest, because that's all we're interested in. Because support and resistance, whenever you see any videos, and certainly the way I day trade, because my swing trades and my day trades are done very differently. My swing trades are very, very simple. They're based on things like this. I actually use a river strategy for mine, which is a Bollinger Band compressed. But essentially it's the same thing. Because it takes so long to play out, I'm expecting it to last 3 or 4 days, sometimes even 3 or 4 months. But the rewards are better. Don't get me wrong, the risk is pretty high as well. And we're about to find that out. So you're looking at this and you're thinking, all right, Scruff, what you playing at? How are we going to make some money? Show me, because all I want is the money. Of course you do. All right, let's break this down and show you the process of the trade, which will help you make the money. And I hope that makes sense. And I'll stress time and time again in videos, don't chase the money. The money will look after itself. Concentrate on the process. Because if you get the process right, it's the size of your position that you put on, which will give you your money. So what we'll do, I'll show you the way that I would use it, because I change it ever so slightly. And I'll do an entire year on a daily chart, and I'll add the pips up as we go, and we'll see whether it makes or loses at the end of the year. All right, I'll keep it current. So this is crude oil, and we'll do all of 2019, because that was the last full year, and we'll see if we made a profit. So let's have a look. January the 1st. Too far, Scruff. Sort yourself out. There we go. All right, put a little line in. We can see where the starting point is. So we're starting here. Now, I've just said I change it slightly, and I do. I change this to 65, and just extending it that little bit thins out the cloud slightly, but it just gauges the markets that little bit better. Right, so what we're going to do, we're going to start on the 1st and work right through the year. But on my longer term trades, I always pop an RSI on. I extend that to 28 with a 50-50. So why do you do that, Scruff? Because I find when I slow it down, it gives a stronger signal. Then I keep this just the same, which is 70 and 30. Okay, so that's it. So we've now got a makeup of a chart, all right? And we're going to start on the 1st, as I've just said. So we don't actually get a signal on this for quite a while. It's here, all right? So what we'll do, we'll then put a line in where we're going to enter, because you enter a few ticks above the close, and your stop, put one there, is the entry candle, and it's the bottom of the entry candle or a few ticks the other side of the cloud. That's your stop. So now it's defining your risk, and it's showing you where you're getting in, all right? Now, with oil being a very, very volatile market, I don't move my break even till it's done 75 pips or ticks, just simply because it'll spike backwards and forwards. It's really volatile. So for the purpose of maths, and just to keep things simple, we know we break even at 75, and because I scale all the time, which is around 50, so I would wait till I'm break even, and then every 50 I'll be taking so much off the table. We'll just see how many ticks it gets rather than a monetary value, because it's Sunday afternoon and the maths will blow me brain. It really would. So let's just see how many ticks we get, and then I'll work the profit out at the end. So on this one, we know where we got in, which is this line here, and the highest it got to was there. So that's 1126, and I'll round it down to the nearest 50. All right, just to keep it fair of sorts. So that's 150. So that was the first trade. Second trade is here. Okay, so we can see that clearly. So that's there. Stop. Same candle, either above the candle or the other side of the cloud. I'm quite aggressive, so I'm always the other side of the cloud. You're waiting for it to close below the cloud, and you want the RSI to be pointing and coloured in the same direction of the trade, which is there. So that is there. 660. Pretty good. Live with that. So we'll add that to the little calculator. So that will be 650. So we're up to 1800 up to now. Good result. It's a bit scary now, because we're waiting for that to go into there. It hasn't broken above, but it broke below, and this is red, and that's red. So this would tell me to enter this market. Ooh. And it is probably a loser. So we're going to assume that it does lose, because I want this to be fair. 349 pips it's just cost you. All right, so we'll say 350 for argument's sake. Minus 350. We're down to 1450, guys. Bugger. Let's give us another signal, which is here. And that same candle underneath the cloud is there. And that one's just cost 611 ticks. Because I'm assuming the market's reversed on you. Scary stuff. Scary, scary stuff. Minus 611. You're now back to 839. You've lost a colossal amount. And this is why I keep telling you your emotions play with you all the time. This is a dangerous market because it swings violently all the time, and you've got to really be control of what you're doing. But it's also a very rewarding market. But the question you have to ask yourself now is, if you've just lost the thick end of 1,000 ticks in 2 trades off the belt, will you pull the trigger again? But you have to, because it's the nature of what we do. So we come along, there's your new entry. Side of the cloud, there's your entry point. That's telling you you're right, and it's broken. Find what we're going to get out of this one. 290. So remember, I rounded down to 50. So that's 250 back in the pot. It's 250 on the calculator. 1,089. Best part of the year through. No real signals. No real signals. There it is there. It's green. It's broken. We're in. Other side of the cloud or the bottom of the candle. So that was a good one. And then we're waiting. There's the next entry. Put the candle and you put your stop other side of the candle. What do we get out of this one? Good result. 651 out of this one. So we add 650 into the mix. And if you can hear some noise in the background, I do apologise. That's my grandson running riot downstairs because he is a nightmare. But we love him to bits. So we follow this down. There's your next entry. Below the cloud. Into there. And we're nearly at the end, guys. We're nearly at the end. And then we'll show you the calculator as we work it out. There we are. That one closed below. It's pointing. Everybody's happy. What did we get? Now remember, we're looking for 75 ticks to be break even. 265. Look at that. So that's 250 in the pot. And we're currently at 1989. So it's all right. Nothing. It hasn't gone into the cloud because that's one of the rules. It must go in the cloud and come out of the cloud in order to re-enter. It's in the cloud here. There's the entry candle there. So the stop to the side of the cloud. There's your entry. Now this is going to be nasty because it looks like it stops you out, which is there. All right. And we're going to assume it stopped you out because this is real world stuff. It just took 220 off you. So we'll minus 220 off the pot. Up to 1769. Start crying. So it went there. That's where it stopped you out. But the next candle put you back into the game. Move that up to there, down below the cloud. So what do we get now? Measuring tool 648, and it was the last trade of the year. So plus 600 because we round it down. Remember that, and your total is 2369 for the year, just using a cloud-based system. You had a couple of bad losers that hurt you, and they did, but that's the nature. There's nothing 100%, and you have to take the rough with the smooth. But you assume that you're at £5 a point, which isn't out of possibility, £5. But even at £1 a point, you've made £2,369 in a year. That's a good holiday. It would certainly pay for Christmas if you looked at it that way. But if you had a £5 a point, it's just made you just shy of £12,000 a month. So that's just on trading oil. What if you were trading 4 commodities at one time and each one of them performed exactly the same? Then it would give you a good wage. And that's the way to look at it. Very, very simple. So it is quite a good indicator. And as you've just quickly seen with them, without much thought put into it, just using a cloud break and a quick look at an RSI, it works. So it gives you something to think about. All right? And it's very easy to understand. You know, there's not a lot of rules to it. Don't need a great deal of thought. It gives you a good reward. Just test it. See what it is. So it's just an idea. That's all this video was for. It's just an idea. That's all this video was for. I was asked earlier this morning if I could come up with a quick strategy for end of day for somebody that works and hasn't got time to look at the charts, and they wanted a different spin on things. And that's about as simple as I can get it, guys. You can do it with I'll do another video on a moving average crossover with a twist. Normally it's sort of 20 over the 50, that sort of thing. But I'll show you one that works. All right, and I'll try and get that done this week. So that's it. Happy days. Nice, easy strategy for you to play with. With trading being individual, it's always down to yourself how you interpret the screens. I'm just going to try and give you some ideas to put a little bit of thought into your grey matter and try and show you that trading ain't as hard as what it's made out to be. Okay. So with all of that, if you like this content, please subscribe, hit a like, and comment below. And I'll answer it best I can in plain English. And if I can help you, I will. Okay? So remember, guys, do what you love, and money will follow. See you on the next one, because I can hear Winky boiling the kettle. See you soon.